See, last full fiscal year, we grew at a decent 14% YOY growth in our top line. At EBITDA level, we had a healthy 38-40% year-on-year growth. If we see in terms of free cash flows, which is one of the most important metrics that we track, we generated about 349 crores for the full year. Out of that, about 220 crores was shared back with shareholders, 130 crores getting added to balance sheet. So it was a pretty robust performance for FY19. Going forward, we are taking steps to get our inputs right, which means that our traffic, which is at about 139 million unique users, growing at 25% year on year, we want to ensure that we maintain that. On the monetization side, we are trying to ensure we cover every corner of the country. So expansion into tier 2, tier 3 cities via our feet on street continues to be there. So a combination of these particular inputs, I think, should help us do fairly well even at a higher base of FY19.
All right, so also talking about a little bit about the tier 2 and the tier 3 towns, I think there is a shift of business mix out there on account of which we've also seen some amount of decline coming in the realizations, at least sequentially. I'd like to understand what can we expect going forward and the trend that could play out in terms of realization for the upcoming quarters.
Tier 2, tier 3 cities are the areas where we are growing fairly well. So tier 2, tier 3 today contribute about 27% to our top line and broadly about 47% to count of paid campaigns. Tier 2, tier 3 definitely have been growing their share and we expect the same to continue going forward as well. Considering the pricing or the average ticket size in those particular territories is lower, that results into downward pressure on our blended realizations. But the good part is that since realizations of the ticket size are much lower, there is a decent scope to take those particular realizations up. So on a year-on-year basis, I think it will be a combination of paid campaigns growth as well as realizations growth that should help us drive our overall revenue growth.
All right, Mr. Bansal, what's the update on pricing right now if we compare that with the volumes and what takes precedence over the next 2-3 quarters?
Last particular quarter, out of the 16% top line growth, about 12.5% materialized due to paid campaign growth year on year, and the rest, about 3.5% came from realizations. So at this point of time, the growth is more coming out of paid campaigns, which is, as I said, mainly to do with our particular additions to feet on street becoming productive. As and when they become productive, that results into higher signups and higher paid campaigns.
All right. And the update on the Search Plus, can you tell us the visibility, in the earnings from that area?
So Search Plus and related areas, they are mainly for user experience at this point of time. We want users to engage more with the platform. As far as our monetization is concerned, whether a SME pays us for the core listing product or any other add-on product, it's the same SME that is paying to us, and most of our products are digital in nature. So we have added a lot of features, plus you will also see our particular platform becoming multilingual in nature. We would start catering to regional as well as international languages soon. So those particular initiatives should help us get more users and the same users spending more time on our platform.
All right, you also last year initiated a transition to transaction-led platform. How is that process panning out right now and what are the updates there?
So transaction-led platform or such initiatives, we have been at it for last about few years. So if you visit our particular platform, for example, if you want to search for any particular movie, we do have movies online where you can find a particular movie is available on which OTT platform. Today, there are so many OTT platforms and at times users find it difficult to know, okay, this specific movie is available where. Similarly, in case of hotels, in case of products, we are taking a meta approach where we become a one-stop destination from where users can explore which specific vertical or a platform they want to go to. So we are very clear that we don't want to be part of any cashback or discounting game, but at the same time keep giving value added features to our users in these particular verticals as well.